Hi, I'm Mark Steber, Chief Tax Information Officer here at Jackson Hewitt Tax Service. Most taxpayers have heard of tax penalties, but the real question is, how do they actually work? What will really happen if you don't pay, manage, or take care of your tax debt? First, let's start with the basics. How does tax debt start? Well, if you have earnings, taxes aren't only due on April 15th, but they're actually due all year long. If the correct amount of taxes isn't paid throughout the year, through either paycheck withholdings or estimated tax payments, you will owe tax on April 15th when the true-up actually happens. There are many ways to incur penalties in our current tax system. You can underpay taxes during the year, fail to pay the balance due on April 15. The IRS can assess taxes, penalty, and interest for what they think is a mistake on your tax return, or you can fail to file a tax return altogether. For any of these reasons, and many more, tax debt can begin to accumulate and trigger penalties and interest if they remain unpaid. So what happens if you miss those payments and you start getting penalized? Because you owe the IRS, they'll typically start off sending you notices or letters. Be aware, these letters never come through email or phone calls. The first notice is generally a reminder that you may owe taxes, or the IRS has questions, or some indication that you might owe additional tax. If the notice is correct and you pay immediately, the notices should stop and you won't have a balance due anymore. But if you don't respond or pay, you will likely receive a second notice. The IRS will typically contact you to let you know if the debt is not paid, a levy may be placed on your paychecks, retirement account, Social Security benefits, federal or state refund from other tax years, and many more. Over time, if these notices go unanswered, the IRS may be able to obtain the money owed other ways, and even begin the process to seize your property if a taxpayer has a large enough tax debt. Don't let it get to this point. If you have IRS notices and letters piling up, there are many ways out. First, you may not even owe, in which case you have many rights and options to appeal a tax debt assessment, including the penalty and interest reduction. If you do owe, there are ways to pay over time and even other alternatives to reduce the debt. Jackson Hewitt Tax Debt Resolution Specialists can explain your options, such as an installment agreement or an offer in compromise, which is simply an agreement between a taxpayer and the IRS that allows the taxpayer to pay back less than the full amount owed. If you owe back tax debt or have IRS notices piling up, old or recent, talk to a tax debt resolution specialist like those at Jackson Hewitt to learn about these different programs today. For more information, visit jacksonhewitt.com. And don't forget to like this video and subscribe to our channel to get more seasonal tax tips.